So what is going on, guys? Today we are going to do a potential trade breakdown. And why is it a potential trade breakdown and not a trade breakdown? Is because we are not trading the day before CPI. You are not trading the day before a big news event, because usually the market prepares for the big news event as inducing liquidity and engineering liquidity inside of the market. So what we have here is the last hour of trading. It is the time between 15:15, so 3:15 New York local time and 16 New York local time. What we have right here is a 15-minute fair value gap, a discount array, and for the premium members, I taught them how to understand the CPI, why you shouldn't trade in this CPI. I basically had in the day ahead of CPI. Basically, I had a long from this CE. I did not trade, I had a tape read, but I had a potential long from this because we saw an SMT divergence, and then I got stopped out at break even at this point, falling short of 0.1 points onto this buy side liquidity pool. And also, after seeing this, I told my premium group that we will see this level act as resistance, and we can see the bodies remaining inside of this. But what is the point in this? Why am I telling you this? Is because when I saw this, I highlighted this 50-minute fair value gap, in which I've told everyone that we can see a reversal, because I don't think that the market is going to leave this. And usually the market will take an obvious buy side liquidity pull at the last hour of trading, so this might have been a good opportunity. But again, being disciplined pays more in the long term than trying to win right now in uh, terrible market conditions. So what we have right here is a 50-minute fair value gap, a 50-minute discount array in which we expect higher prices, and therefore we see that these equal lows, because they are equal, are right here in this market to induce retail traders to buy and place their stop loss below these lows, because they think that this is a very strong support level in which the price is not going to hit. So the market goes up, making them think that these lows are going to stay intact. Then it drops, taking out the sell stops. And what we have to understand right here is that there's also breakout traders. When they see these levels being broken, they will go short on a buy stop. They go short right here, and their stop loss get taken out right here. So retail traders lose two times. We see a bullish market structure shift, leaving out a bullish breaker, because we're taking the low and then the high. We also have a buy side imbalance, sell side inefficiency right here, which is a fair value gap. We've traded to the upside, taking out this buy side level, and at this time, 15:15, we have the last hour of trading macro, in which we come back into this fair value gap, into this bullish breaker, and here we can be a buyer. We can be a buyer right here and buy more right here, pyramid, like you see me do in my normal executions. Our target is this buy side liquidity pool, this obvious buy side liquidity pool, which is basically retail trader stop losses. And when, as I've told you right here, retail traders will try to will try to buy into this, will try to have buy orders right here too, so they will buy on a breakout and their stop loss will be hit too. So we have these guys being stopped out, and we also have these guys being stopped out. As for pyramiding, as for adding more positions, you could have added more positions right here, but this trade would be a full target, no partials, because there's no really partials to take. If you enter right here, you're not gonna take any partial right here, because it is too close, and also you're not gonna take any partial at this because it is too close to your terminus. But what I would uh, what I would have done if I was live trading this, if these were normal market conditions, is I would have left 20% to terminus. We did not see that. We were so close right here, but right now I don't think that we're gonna see it. And as we've seen that we've taken this buy side liquidity pool, we are going to move our stops to break even, which gets hit right at 15:51. The last last hour of trading macro is until 15:45, so we can see that the buy side liquidity pool is hit right at that time. And this was the breakdown, guys. I hope you enjoyed. This is the things I do every single week, maybe every single day in my premium groups, because I love doing these things. I love helping you guys. And if you want to see this daily or weekly, make sure to join my premium group. So I'll see you inside. Peace.